Have you ever looked at a company that could either be the next big thing or a complete bust? That's exactly what we're tackling today. We're diving deep into the upcoming Hong Kong IPO for HanXBio Pharmaceuticals. And let me tell you, this is a classic high-stakes biotech story, but when you peel back the layers, it gets really, really complicated.
So, this really gets to the heart of the matter for anyone thinking about putting their money in. We've got a company with, let's be real, basically zero revenue from its products, and it's burning through cash like there's no tomorrow. So the big question is this a golden opportunity to get in on the ground floor? Or is it just a financial black hole waiting to swallow up your investment? Let's figure it out. All right, so to get started, you've got to understand the story HanXBio is selling to the market. Every IPO has one, right? A polished narrative to get investors excited. And this one, it's a really good one. Let's break down their pitch. Okay, this is the core of their pitch, and it's a pretty brilliant analogy. They want you to think of their drugs not like old school chemo that just blasts everything, but more like a special forces coach. See, their drugs don't kill cancer directly, no. Instead, they're designed to train your own immune system to teach it how to spot the bad guys and take them out with military precision. It's a powerful idea. So here's a look at their product lineup. And this table, well, it tells you everything you need to know about the company's big bet. Look at the status column. Everything is still in the clinical phase. That means nothing is approved for sale yet. And their entire future, pretty much everything, is riding on this one core product, HX009. And it's only in phase 2 of testing. Oh, and see that one at the bottom, HX008? Yeah, they already sold that off, basically just to keep the lights on. All right, that story is pretty compelling, but now it's time to follow the money. Let's look at the hard numbers and see if this beautiful story actually holds up. This is where we separate the hype from reality. And wow, the first number we see is a big one, a loss of over 117 million yuan in just 1 year. This is what we call classic biotech cash burn. All the money is pouring into R&D and practically nothing is coming in the front door. That furnace is absolutely roaring. And that leads us to this terrifying number. Think of it as the company's death clock. Based on how much cash they have and how fast they're spending it, they've got about 31 months left. That's it. So you see, this IPO isn't just for growth, it's for pure survival. They are desperately looking for a gas station before that tank hits empty. So you might be wondering, how did they even make it this far? Well, it wasn't by selling their core drugs. As you can see, they've been selling off other assets, like that HX008 drug we just talked about, and taking cash from early investors. Their entire future now hinges on the money from this IPO, and then hopefully more funding or actual drug sales way down the road. Now just look at this chart. This is their liquidity ratio. It's a simple measure of whether they can pay their short-term bills. You want this number to be above 1. Well, HanXBio's ratio has just fallen off a cliff. It went from a super healthy 4.75 all the way down to a projected 0.93. That means soon they'll owe more in the short term than they have in cash. That is a massive flashing red flag. So what caused that nosedive? Well, this is a little detail buried in the fine print. It's something called a redemption liability. Basically, they promised their early investors that if this IPO fails for any reason, they have to pay them back 138.5 million yuan immediately. And since they only have about 150 million in cash total, well, you do the math. This is a true life or death situation. This IPO cannot fail. Okay, so keeping that incredible financial pressure in mind, let's switch gears and look at the science itself. I mean, you can have all the money in the world, but for a biotech company, if the science isn't solid, you've got nothing. And HanXBio's model has some pretty big potential flaws. The entire business is basically walking a tightrope. There are so many places where just one little thing goes wrong and the whole thing could come crashing down. First, they've bet the entire farm on just one drug, HX009. Second, they don't even run their own clinical trials. They outsource all that critical work. And third, all the brains behind the operation, it's really just the 2 founders. That's a lot of risk piled up in one place. And here's the kicker. Their big bet, HX009, targets something called CD47. Now, HanXBio is proud to call this a global first. But you have to ask yourself, why is it a first? Well, it turns out that huge pharma companies, we're talking giants like Gilead and Pfizer, already went down this road and gave up because of dangerous side effects. So this global first might just mean HanXBio is walking down a path that smarter people already abandoned. It's an incredibly risky gamble. So with all this risk, you have to wonder, who's in charge? Who's actually flying this plane? Because leadership and governance are just as important as the science or the money. Let's take a look inside the control room and see if the people in charge give us any confidence.
Well, this chart says it all, doesn't it? Even after they take money from the public, the founder, Dr. Zhang, and his family are still going to own almost 56% of the company. So what does that mean for you? It means public shareholders like us will have almost no say in how things are run. That can be good for quick decisions, sure, but there's also no one to stop the founder if he makes a bad call. And speaking of checks and balances, you might want to sit down for this one. It turns out the company has a really troubling history here. The prospectus actually reveals that a former senior executive was embezzling money from the company for almost 4 years before anyone noticed. 4 years. That's a massive failure of internal controls.
So after this huge scandal, what was their big fix? You'd think they'd bring in a team of forensic accountants, right? Nope. Their solution was to put in an electronic approval system and start requiring receipts for expenses. I'm not kidding. These aren't advanced security measures. This is corporate finance 101. The fact that a company this close to an IPO didn't even have these basics in place is, honestly, it's pretty concerning.
Okay, we've gone through the story, the money, the science, and the management. We've seen all the red flags. Now it's time to put all the pieces together, add one final bit of intel from the market, and come to a verdict.
First off, let's see where HanXBio fits in the current market. When you look at the recent IPOs, it's not seen as a top-tier must-have stock. The general feeling is that it's firmly in the middle of the pack. It's interesting, for sure, but it's definitely not seen as a guaranteed winner. And now for the final critical clue. There are very strong rumors in the market that HanXBio has hired a market cap management team. Now, what is that? It's basically a firm they pay to go in and buy up shares right after the IPO to prop up the price and keep it from crashing. This is a huge signal. It suggests the company itself knows the stock might be volatile and is planning for a short-term speculative play, not long-term stable growth. So, after all that, what's the final play here? Look, this is absolutely not a safe, long-term buy-and-hold investment. The financial pressure, the scientific gambles, the governance issues, they're all just too big. But that rumor about the market cap team changes things. It makes this a potential short-term, speculative punt. So the strategy isn't to bet your life savings. No way. It's to treat this like a lottery ticket. Spread your exposure, take a small position, and see what happens. And that really brings us to the final question you have to ask yourself. We've laid out all the evidence, a company with a great story that's also on the brink of failure, massive scientific risk, but with market whispers of a short-term price boost. So is the potential reward here worth the very high price of the ticket? That's a decision that really comes down to your own appetite for a gamble.